U.S. corporate buybacks providing a tailwind to the stock market to the tune of roughly $1.2 trillion so far this year. That is 15% ahead of this time last year. And back with us is Chris Versace, Tematica Research Chief Investment Officer. Chris, I find it fascinating that we have seen this big uptick in buyback authorizations and buybacks themselves, given that stocks are near their highs. What is that telling us?
I think to some extent, Julie, it reflects the nervousness that we saw in the market earlier in this year. I think the buyback programs, they surpassed the 1 trillion level back in August. And, if you were to look back, a lot of volatility in the market, even though the overall market has moved higher, it's really been tied to something you and I talked about earlier, the AI trade. If we look across, the wider S&P 500, there's a number of companies out there that from a technical perspective are below their 200-day moving average. And I think that's really where we're seeing the uplift in a lot of these programs because their shares are undervalued.
And it is at a time when it seems like there is an uptick in confidence among CEOs potentially as well. I saw another story this morning that talked about the mentions of quote unquote economic slowdown on conference calls is down quite a bit. Bloomberg was tracking those mentions. And so I guess if you put the buyback together with that, corporate America, it seems, is feeling relatively confident.
Yeah, I think that's right. When we take a look at the most recent service PMI numbers, remember, a lot of folks take a look at manufacturing and services because the services side of the economy is about 85-90% of GDP. I think that deserves the greater focus. And what we saw was a rebound in new orders, a pickup in activity. And I think that, folks are feeling a little bit better about it, at least on the corporate side. On the consumer side, obviously, we still see a bifurcated consumer. But to your point, I think that companies are feeling better. They have cash flow, but depending on where they are, they might see their stock undervalued, hence the use of the buyback program, which I like, but I also like to see that balance with dividends for what it's worth.
Okay, good to know. And you mentioned the consumer. Obviously, that's the other big part of the equation right now and what we're watching very closely. And the consumer, particularly the lower end consumer, doesn't seem to be holding up that well. Do you think that you avoid those areas of the market right now that are sort of leveraged to that consumer?
I think by and large, you want to do that. Look, you always want to go where the capital or where the money is being spent. And I think that helps explain why folks have been really keyed in on the AI trade. There's also, the level of earnings growth that it's expected to deliver next year. When we look at the info tech sector, we look at the weighting in the market, it all kind of goes hand in hand. But you do want to avoid potential pitfalls or, as I talked about in the earlier segment, capitalize on potential pain points. So from my perspective, when we see a cash-strapped consumer, we're looking for folks that are looking to stretch their disposable spending dollars. Where are they going to go to do that? Yeah, you have your Walmarts, your Costco's, but you also have the holiday shopping season. To me, that really sets up nicely for a company like TJX or maybe even Ross Stores.
Well, and that also comes back to what I was going to ask you as well, which is outside of AI, where are you looking? So you just mentioned a couple of examples. And I would say not just outside of AI, but outside of that AI universe. Like you said, you're looking at Eaton, which obviously is not an AI company, it's an industrial company, but it's servicing that AI trade. Is there stuff that's just like not AI at all, aside from like TJX, et cetera, that is attractive right now?
Yeah, no, I think that's right. We look, I think that ultimately AI is going to be a lot like the internet, and it's going to cut across a wide array of industries. And when we look at, that adoption level, whether it's in accounting firms, law firms, we're looking at personal and body care companies that are looking at, we look at Axon, Motorola solutions, right? We know that AI is coming into productivity plays there for public safety. So I think it's going to be a very pervasive technology, but there are areas where it'll have less of an impact. And I think, companies like TJX, Ross Stores, some of those are the areas. Areas outside of those that we're kind of looking at, even though AI is a bit of a play, we do like the public safety sector, like I had mentioned. So there are areas out there. I think the key, Julie, is going to focus in on where's the money being spent and what companies are poised to deliver faster earnings growth than the S&P 500, which, by the way, The market expects it to deliver something north of 13% next year. That's a big number.
Yes, it is a big number. Chris, great to see you as always. Thank you.